Money management firm Van Eck filing with the SEC for a new Bitcoin ETF. Remember, they withdrew a filing back in January after pulling plans for a similar ETF back in September. Yesterday, SEC Chairman Jay Clayton spoke exclusively with our Bob Pisani on this show, who asked about the regulatory hurdles that the commission has in place for Bitcoin ETFs. Listen.
Those hurdles are the hurdles that we think a Main Street investor expects if they're going to invest in a product. You know, I understand that there's a great deal of discussion about these crypto assets, but again, we're not going to relax our rules based on the level of discussion. We need to know that the pricing is certain. We need to know that the assets are there. We need to know that it's going to function as our retail investors would expect those products to function.
Joining us now at Post 9 is Jan Van Eck, the CEO at Van Eck, and Bob Pisani is back here at Post 9 as well. So, Jan, twice you shelved plans because of concerns about SEC approval. What's different this time that you think it's going to go through?
Well, we're going to keep knocking at the door until it let us through, so persistence is the game here. But I would say this is a very different filing than our other filings. The other filing were on Bitcoin futures, which came out in December of last year, and this one is actually kind of, they call it on Bitcoin physical itself, sort of like GLD. So the trust would own Bitcoin, not a derivative of Bitcoin.
And what, with your conversations with the SEC, do they seem like they're going to be okay with that? What was the concern with futures versus the actual asset?
Well, there's investor concerns and regulatory concerns. So let's talk about investor concerns first. When you invest in a derivative, the shape of the futures curve can affect the price. Like oil futures is different than oil, and that's, I think, can be misleading to investors over time, and we've seen that historically. In terms of the SEC's expectations, what they care about is what's the right price of Bitcoin, and how do you know that the fund isn't going to lose Bitcoin? And the answers here are pretty different than some of the other answers. So to keep talking, number one, the price. One of the big changes in the market is if you want to trade 10 or 20 or $30 million of Bitcoin these days, you can do it. And there's an over-the-counter market for that, and hedge funds are trading it every day. It's not visible on Yahoo Finance, and it's not visible on Coinbase. We are bringing that visibility to the market in the index that this new ETF will track. So that's number one. Secondly, how do you know that you don't lose the Bitcoin? The SolidX people had arranged for insurance over the loss of the private key, which is kind of the best you get these days in terms of custody. So hopefully it'll be met with a little bit better reception.
So the SEC released a long letter, I think back in January, where they basically outlined a whole list of concerns they have about Bitcoin and Bitcoin ETF. Some of it was pricing, some of it was custody that you addressed, but they had a lot of questions, and they basically said, you're going to have to answer all of these questions before we approve any Bitcoin ETFs. Do you feel your new application has gone further than anybody else's to address the SEC's concerns? I'm just wondering whether you have increased your chances by responding to their letter.
We hope so. We hope so. And it is a dialogue, and this is what's different about Bitcoin than other ETFs that you can launch, because the market is changing so much, the market infrastructure. And I call this year the year of regulation. And the SEC is, I think, walking quietly to get what a year ago was literally 100% an unregulated market. I mean, Coinbase, everything about it was completely unregulated, and now they're bringing the broker-dealers under regulatory supervision, they're bringing fund issuers, they're bringing pricing availability. Everything is slowly, without kind of trashing the whole party, they're bringing everything, so by the end of the year, you're going to see a pretty regulatorily engaged market.
It's rather remarkable because the Chairman Clayton made it clear that they're essentially helping to create an entire superstructure around that never really existed before. So if you have an exchange that wants to register with the SEC to trade cryptocurrencies, how do you regulate the pricing, for example? We have an NBBO in the securities market. That doesn't exist there. Custody issues, they're essentially going to be involved in creating the superstructure. Chairman Clayton seemed to imply that they're not opposed to setting this up, but they're not changing the securities laws to accommodate or make it any easier for people to provide financial information.
Fair enough, but I mean, look, there are other markets, gold, and most of the bond market trades over the counter. So I don't think we have to wait for the day that Bitcoin trades here at the NYSE either. So, that's kind of, let's be reasonable in terms of our expectations and not apply a higher standard to Bitcoin than exists for other assets.
Finally, You mentioned U.S. regulation. Vladimir Putin made some comments about Bitcoin today, or crypto in general, and said they're treating it with caution. How important is it about international regulators coming to the table?
Sure. I mean, look, the first big step last year was to address AML concerns of money laundering and terrorism. And basically, Treasury went around the world and said South Korea, Japan, every bank that's involved, because even Coinbase needs a bank to on-ramp to their system, you better make sure you're doing your AML. And that was step last year. I think every country is approaching it very differently, and the U.S. may be a little bit behind the curve. We'll see.
It's not for everybody at $200,000 per share of this ETF. I guess you're aiming at institutions there.
Yeah.
Jan, thank you for joining us. Jan van Eck. We'll see if this new ETF gets approved. Bob Pisani, thanks for being here too.